Okay, so for this video, we're just gonna go over, you know, uh, some of the trades taken for January, for AU. And AU, the first clip here, it's around 9 a.m. We're still kind of sticking to those OSIS times as far as the sessions, the main sessions, London and U.S. session. This tends to move mostly during U.S. session. Sometimes it can take off, for London. But for the most part in here, we have just a wrong trade just to begin with. We haven't been stopped out or anything yet, but was in the money for a little bit, and then it went back on us, mainly due to a bad entry. It wasn't really along the levels, 0.769, uh, which is, it's not too bad. Still a pretty good ratio as far as what I'm risking for what my potential reward could be. So if the trade does play out, it is definitely within my rules and within good risk management. I gotta work on clearing up my chart, and towards the end of the month, for February, I do that, and it's just a lot easier on the eyes. It's just a lot clearer in a way, um, to tell which direction it's gonna go mostly, most likely. Um, I mean, just not having so many lines, like looking at this now, it's just it's a little more confusing. Even though I have that amount of experience and whatnot, like this trade here did play out. We went, you know, we were negative in the P&L for a little bit, but it shot up, and it bought up about 70 pips. A little over 70 pips. So that would have been a good move. To really be patient and really wait. Good 1 to 3, win ratio with this one. These moves though, they don't happen too often. Like you have to wait. You have to wait for basically consolidation. You need to see the market ranging for a little bit. And usually when it's ranging, um, it'll be creating a pattern. And on the time frames you want to see that visible pattern form, like there's a point A, point B, point C. There's clear levels of support and resistance. You want to see that done on the 15 minute, or not 15 minutes, sorry, the 1 hour, and potentially the 4 hour. So 1 hour and 4 hour is really where you want to see that, those clear levels of resistance and support in your areas of consolidation, where the market is kind of gathering orders, dicking around. It's not really moving. It's waiting to break out of something. You have to wait for that something to form. So that's just part of the waiting game. Um, so here on AU, it continued to buy up. Didn't even sell off from our target area of interest. It broke right through it. Um, Now I'm here drawing more lines. Again, like you don't even need this much stuff on your chart. This is like the red circles and everything again are really for the beginners, and just to see, where do you want to start paying attention really to what's going on in the market. And basically these are levels that either need to be respected, and the market would be rejected from these levels. Excuse me. Um, or yeah, it'll break right through. And that's what we had here. So we have a break, and then it's come back to retest, or what appears to be a retest. Um, and it is the 6th of January now. So just like maybe 2 days, 3 days since the start of the video. and it's 10 a.m. So this, like, again with OSIS time, between 9 a.m. and 11 a.m. for U.S. session. Um, this is what we're looking at here. Potential buys for AU, but I mean Wednesday there's not usually a whole lot of activity. Like what'll happen is on Tuesday or Tuesday morning, like London session morning, like 2 a.m., 3 a.m. The shit'll move. It'll move for that Tuesday, but Wednesday is kind of like a retracement day. It kind of digs around, and then it'll continue on its direction from Tuesday, or it could reverse. But Wednesday tends to be that day where after a push, the market kind of just dicks around. And now it's, yeah. So we're on the 13th here. We have not, kept our bullish momentum. We're kind of stuck in this range here since I think this the 10th. What is that? The 6th, actually, sorry. So it's the 13th now, 5 days gone. Have not broken out of the zone. But we have respected it. We found support here. See, I'm just drawing what now could be, and this is a 1 hour chart. It's playing out. It could be, and I forgot what they call this triangle. It's not a descending. It's not an ascending. It looks like an equal triangle. Like little. Sorry guys, I don't know the name for it. I should probably learn these a lot better as far as like the labels for these patterns. Just kind of go based on recognition. So yeah, I will be making an effort to learn the names of these, so I could better call them out for you guys. But as you can see, this is still, it's the 13th. We're at 9 a.m. again. It looks like it's selling off. Looks like it's been selling off. But it actually didn't. Okay. So we have a slope here for the 14th. It's a Thursday now. Potentially we could get a break to the bottom, which it looks like we're getting. Or, it could break up above and continue to go. But most of our momentum looks like it'll be going down. And this is what I mean, like how Wednesday, it didn't really move. It kind of retraced and did all that bullshit. And now Thursday, Thursday morning, we're coming back, and now it looks like it might sell off. So you can rewind it and go back to the 13th and see how it was about to sell off. But again, this happens time and time again. Like Wednesdays, not really known for the pushes. They're known for like the ranging moves, or like the retracements. This one, I'm just showing these orders that I took. These are bad psychology in these months. Like, not the best psychology, because even though I'm making these projections, I still have trouble just holding the orders. Just, like, the psychological aspect is not there. And this is UJ. This is just other stuff we're looking at. You have to cut that out. So, like, sometimes I'll use UJ to try and tell or get better confirmation on where AU will be going, because they normally run opposite to each other. Like if AU is going down, UJ sets up to go up, and vice versa. But the thing is, sometimes they don't even move together. Like one will move and then one will just stay still for a few days. Like it's a little weird, but for the 60% of the time, they move opposite of each other. So I think that's like negative correlation, or is the actual terminology for it. But I mean, sometimes it works, sometimes It doesn't. It's all discretion. At the end of the day, it's your discretion and your risk management. That allow you to comfortably take these trades, because you have to keep shooting. You can't really stop. But when you do, miss a trade or you lose a trade, you you can't let it get to you, basically. So that's kind of where I'm at, as far as psychologically, because I know how to, recognize this shit. It's not hard anymore. It's just a matter of having the proper mind to execute these orders, and really, believing, like, these are a lot of lines I'm drawing, and I don't need so much. It's more so to show you, like, you see the pushes and pulls, or the pushes after these little these patterns are made, these little areas of consolidation, and that's basically, them gathering orders, taking people out. AU does not. It's not really known to fake out like that, but sometimes it does. For the most part, it'll respect structure and everything, retest, and it won't break. Um, but sometimes you do. So you have to watch out for the fake outs in these pairs, especially like something like GU, the faster pairs. They happen all the time. But if you can kind of change your mind to trade those fake outs, or just to be weary of them, I think it'll be fine. And that just comes with time and comes with experience and being comfortable in the market, and you really build that up quicker when you stick with certain pairs. You don't want to keep switching pairs. You want to become familiar with them. So that's why I stick with AU and EJ right now, because these are the pairs I've been on for the longest. And they're slow. They're reliable. It's just more about the mental aspect of it now. So we're gonna be starting a 300K account soon. I think for February, or March. At least mid February maybe. Definitely March. But basically, you can't make any mistakes. Like, once you make a mistake, it's a very slippery slope to go down. Like, as far as you make a mistake, you want to revenge trade, you want to chase a move, you want to, you want to make that money back. You miss a trade or you lose a trade. Like, it's just, there's so many ways to do the wrong thing in this. Like, you have to literally, make in a way, make a pact with yourself, make an agreement with yourself. Like, you're gonna be following these certain rules, and you're gonna be, you know, um, just thinking about things from or taking things from an educative perspective, not just looking for the money, because that'll come. It's the process behind it, it's the structure behind it, and it's really just, being able to, excuse me, take take these trades. Look at that. Like, AU, it's the 17th now, and it's sold off. It faked out like it wanted to break above. Usually doesn't happen with something like that. It needs to create more legs. It needs to, you know, form or complete the pattern more, and it is doing that now. All right, so that could be a potential buy up area right here, where we're at right now, because it's near a zone, and we see past support for that zone. and it's also going to be potentially creating another leg for um, the triangle pattern here. So we're at 0.769. That's where we're at. Not sure what I do with this, but it's a Sunday though, so I don't think I actually traded. I try to avoid Sundays, um, and Mondays. Sometimes it does move during those days, but you'd be better off waiting, because a lot of the times those moves are setups for the bigger move in the week. They're like precursor moves. So, um, as far as this AU, that's what we have potentially, because we got a break below, which was really just in the zone, and then we're getting potential breaks above again. So here's just where the patience is needed. It's Monday morning, not really expecting too much from Monday, um, and we bought up a little bit, about cool 30, 25, 30 pips. And that's where I need to start taking my profits. Like I personally, anyway, I really think I gotta start taking at 30 pips, roughly 30 to 40, and just keep going like that until we get breakouts. Like when we're trading legs like this, I gotta be going for less pips. And now it's Tuesday, so we're doing Tuesday London session right now. It's 1:02 a.m. There's nothing here to trade. Like there's literally nothing. So I'd have to come back later, which I did. Okay. Um, shit. So we're on Wednesday now. Wednesday at 9:30 a.m. It doesn't look like it sold off. It broke above, and now we're getting that buy up. So another OSIS time. OSIS time to trade. And it's a potential break. You can see the break and the retest. Um, but these times, this is where you gotta wait and be patient. Cause look at that. Like it's shit like that. Like you can't keep watching it. You just gotta kind of set and forget. We still record this and everything just to show you guys how it forms and how it plays out, but it looks like this is just a wrong trade, like a fake break, and that's what you got to be aware of. Like fake in the markets is very prevalent. Fake outs, they just want to take your money. That's really what it is. Like the market is a place to get hurt unless you're disciplined enough and smart enough to pick your shots to where and manage your risk to where you're not getting hurt. And also just there's a certain level of I want to say intuition with your analysis, or just a feeling. Like you can kind of get the direction of the market once you have enough time and experience in it, in a particular market. Like and you're kind of familiar with the times it moves, like how I try to give you these between 9 and 11 a.m. good times to watch for the actual move. Then maybe for like London session, you do have London opens at around I think like 2 a.m. Is London open at 2 or 3 a.m.? Shit. We'll have to check that, but the times I say for London is really between like 3 and 5. 3 and 5 a.m. because that's when that push will happen. It'll fake out. The fake outs would have already been done for the most part. Not every time because it does whatever the fuck it wants, but for the most part, your fake outs would have been done. And then you're able to get into the market and basically you're fresh. Like you haven't been trading in the previous hours to chip away at your account or mess with your psychology. Um, you should just be fresh to get into the trade, and then from there you start. You know, if your first trade is in the winner, you lose. You're not taking as many losses. You can bounce back quicker, um, and just you know, you're not exhausted. You're avoiding exhaustion with this shit because it can take days to move. It can take weeks to move. Like, you'll have a price projection or a move projected in your head, but this shit could take a while to go. And the thing is, the grimiest shit too is it could take like 5 minutes to get there. You never know. That's the randomness in the game. But what you want to pay attention to is these levels. Like right now, we have the break over 0.77342. Um, we have a retest where it came back down and it looks like it's finding support. And me today trading, like overall, this kind of looks like it could be a double top. But going back further to the left, we see that it's been respecting that level, and now it's just breaking above again. So we're just waiting. And this is actually, like, it normally doesn't even move this fast. I'm just kind of lucky to catch it when it's got that momentum to keep pushing. And it's Osis. See, when we got stopped out a little bit, dicked around. But I would have re-entered. You know, I would have went back to re-enter, got the pips, super over leveraged. I'm gonna be changing all of that. We're gonna be trading a lot more disciplined chart, trading a lot cleaner charts. So it's in the months to come. This is a breakout year. You know, it's for analysis, really. See what I'm doing wrong, cut all of that shit out, and smooth sailing. It's simple. It should be so simple. And it's the 20th, so yeah. See the bullshit. That's because I had like a 8 pip stop loss. And shit was like 9 pips. I gotta stop trying to outsmart the markets, because the markets will always fuck me up. We just gotta start being disciplined, man. So we're now here, Thursday morning, U.S. session, U.S. Open, not U.S. Open, it's 8 a.m. So we check, we see. That's bullshit. I don't know why I did that. Took that sell opportunity. I guess it wasn't bullshit. It actually sold off, but it didn't even break that line that I had. Now it's no longer there. You know, now I'm drawing a new downtrending line, but I was just really early on that. Like, I gotta stop jumping the gun on these orders too. So this is right before the market closes, 4:54 p.m. And if you're still watching, I do want to say thank you for sticking throughout the whole video. I'm gonna keep bringing these, you know, showing my improvements and showing where I'm going wrong. I'm just trying to give out pointers and tips, also for myself, you know. But thank you.